All right, hi everyone. We thought it would be good just to do a quick update given some of the new announcements that came out last week around corporate tax, especially with the registration deadlines. So what we'll do now, we'll do a quick run through of what that looks like, and then we'll just cover the basics as well like we normally do, just as a bit of a refresher. So normally in our webinars, we cover all of these things. So does it affect me? When does it affect me? What do I need to do? And will I pay tax? What we'll do now is we'll just do a quick refresh on who this impacts. And then we'll just stop when we've covered the registration piece, just because we want to make sure that everyone is aware of those fines and when they take effect. So just a reminder around who corporate tax applies to. So corporate tax applies to every single company in the UAE. It doesn't matter how small you are. It doesn't matter if you're in a free zone or if all your revenue comes from outside the UAE or if you have no revenue whatsoever. It doesn't matter. You still need to go through the compliance steps. You might not have to pay tax, but you still have to go through the steps to prove that you don't pay tax. Okay? The only real exception to this is around natural persons. So individuals don't need to pay income tax, but also if you are a freelancer license or a sole proprietorship, then you only have to register, or corporate tax only applies to you if your revenue is up to 1 million or over 1 million dirhams. For every other company, all the legal entities, you all have to go through the compliance steps. So the next question is, now that we know that it does apply to you, is when does it apply to you? So the laws state that corporate tax applies for your financial year, or the financial year, which starts after the 1st of June 2023. Now, for the vast majority of you, that means that you became taxable on the 1st of January 2024. If the rules around it and the timing is a little bit confusing, don't worry, just assume that you are taxable, or you began tax on the 1st of January 2024. Again, there are some very limited exceptions to this, one being businesses registered in Dubai World Trade Center, DWTC. If you are a DWTC company, you need to go and check your memorandum of association. And I think it's on page 3 or 4. You'll see a section called fiscal year that tells you when your financial year is. For everybody else, so just to repeat, that was only for DWTC. Everybody else, with very few exceptions, your financial year runs January to December, so that means that you became taxable on the 1st of January 2024. Okay, now that we've established that it applies to you and when you became taxable, now we need to go through what you need to do. So every company who tax applies to must first register for corporate tax. They have to keep proper accounting records, which we'll go through what that means. And then they'll need to file a tax return after the end of their first financial period, or if they close the business, which we'll cover as well. If you are a company that is going for a free zone exemption, which is a very specific set of rules, then you'll have to do an audit. But for most companies, you won't have to do an audit if your revenue is less than 50 million dirhams. You just have to make sure that you have accounting records completed to the correct standard. All right, we'll walk through those compliance steps. The biggest one and the most recent announcement was around the registration requirements. So previously, the guidance was that registration only had to be done by the time you filed your first tax return. So that would have been in 2025 for most people. However, this has now changed. There was an announcement last week which has specified new registration deadlines. Now, the way that this works, the FDA has basically bundled or put people into groups based on when their original license was issued, or the month, that their original license was issued. So it doesn't matter what year your license was issued, it just matters which month it was. So if you check your license, you'll see license issue date, and whatever that month is, that determines when your registration deadline is. Think of it like a birthday. If you have a January license date, then you have a January birthday. That means you have to register by a certain deadline. So on the screen now, we've got the actual registration deadlines applicable for each month. So if we're looking at that, what the example I just used was, let's say you registered your company in January 2018. Okay, that means because your license month is January, you have to register by the end of May this year. Okay, if you registered your company in January 2023 or even January 2024, right? Your license month is still January, so you still need to register by May 2024, so May this year. So you've got a couple of months to do it. You'll see from this table that February also has been given the May deadline. The FTA stated that they gave January an extra month because of Ramadan. So January and February dated licenses, you need to register by the end of May. You'll see that the next grouping is anyone with a March or April license birthday. They have to register by the end of June. May, you have to register by the end of July. June, you have to register by the end of August. July licenses, you have to register by September. August and September is by October. October and November by November. And then December, obviously, you need to register within that month. The really big part of this is that the FTA have said that there is a 10,000 dirham fine if you miss your deadline. Okay, so if you haven't registered already, in our previous webinars, we've always talked about how there's no benefit in waiting to register. Well, now we have a stick to make you register even sooner, which is this 10,000 dirham fine. The FTA won't waive this. This is, I was listening to the head of the FTA on the radio the other day, and he said they've given enough sort of grace periods, they've given enough leeway. A deadline is a deadline. You need to get your registration in by these dates or you'll get that 10,000 dirham fine. Okay. If you're not sure, if you're still not sure, please contact us. Go to taxready.ae. That's taxready.ae. And you can book a free consultation. We'll walk you through your deadlines and everything around this. Please don't end up with a fine. It's very clear. We've got a good couple of months to get your registrations in. So there's really no excuse if you end up with this fine. Okay, back to some of the pieces that we were already aware of. So the accounting requirements. So every company, you have to do proper accounting records. You can't just sort of do a bank statement and use that. You need to be producing a profit and loss statement and a balance sheet. The general accounting standard that is used for the tax regime is International Financial Reporting Standards, or IFRS. There are some variations to this depending on the size of the business, but it's all underpinned by IFRS. So you need to make sure you know what you're doing with your accounting. The accounting really sets the base on which you will be paying tax, or you'll be qualifying for an exemption, or you'll be under the threshold. All of that relies on accurate, proper accounting. And then on the flip side, if you don't do accounting properly, then the fines are even more significant. So the fine for not keeping proper accounting records starts at 10,000 dirhams and then goes up to 20,000 quite quickly if you can't rectify it. Now, the thinking behind this, if you look at the actual tax regime and around who has to pay tax and who gets exemptions, I think it's quite a generous tax regime, especially for small companies. But in return, the FTA are asking that you keep very accurate records to ensure that those that do qualify for these exemptions legitimately qualify, and they can have proper records to show that they qualify for these. So it's fair enough that the FTA has this expectation, and as a result, there are significant fines if you don't play along, so to speak. All right, we'll do a quick will I pay tax summary. So look, there are three buckets. If you are a free zone business, think of it as 3 or 4 layers that you need to fall through before you end up paying tax. So if you are a free zone company, one exemption you can look at is the qualifying free zone exemption. There are a couple of criteria you can meet to get this. The first one looks at, okay, the source of your revenue. Is your revenue coming from other free zone companies? So do you just do business within the free zone bubble in terms of where your revenue comes from? If yes, then there's a good chance that you will qualify for the free zone exemption. If you are a free zone company, but you have revenue coming from outside the free zones, so either within the mainland UAE or outside the UAE, right, then you won't get under that initial criteria. You need to look at what the actual activities of the business are. There is a set list of activities, and if you meet the criteria for one of those activities, then you could still qualify for the free zone exemption. So think of that first criteria as geography. So if your clients are all free zone companies, or your customers are all free zone companies, then you'll probably meet that criteria. Or if your customers are outside the free zones, or a combination of inside and outside, so either that's outside the UAE or inside the mainland UAE, then it depends on the activity. Now, the list of activities, I won't go through it now because it's quite detailed. It's very much focused around heavy industry, around financing, things like leasing of aircraft, or shipping or manufacturing. Generally speaking, services do not meet the qualifying criteria. So if you have, say, a marketing consultancy or a management consultancy in a free zone, but your clients are all overseas, then you won't meet that criteria. It has to be either free zone companies as your clients, or one of the very narrow list of qualifying criteria, which generally doesn't include services. Okay, so let's say you are a free zone company, you don't meet either of those criteria that we just went through, that you can still be exempt from tax for the next 3 years, this year, next year, year after, if your revenue, your annual turnover, annual sales, annual gross revenue is less than 3 million dirhams per year. Okay, so if you are let's say using that example, you're a marketing consultancy with clients outside and your clients are all outside the UAE, you won't meet the qualifying free zone exemption. But if your revenue is less than 3 million, so let's say your revenue is 2 million a year, right? That means that you'll still be exempt from paying tax for 2024, 2025, and 2026. You still need to go through the compliance steps that we've talked about. So you still need to register, you still need to do accounting, and you'll still need to file a tax return. But when you file that tax return, you'll be showing your accounting records, which show your revenue being under 3 million, and then you'll get the exemption from paying tax. Please just keep in mind, right, for all of these, the registration deadlines still apply. It doesn't matter, these exemptions might mean that you are exempt from paying tax, but you're absolutely not exempt from going through the compliance steps. You're not exempt from the registration fines. You're not exempt from doing accounting and the accounting fines, and you're certainly not exempt from filing a tax return. So, very important we draw the distinction between a business that is exempt from paying tax, right? This is a business that is exempt from having to actually do any compliance steps at all, which is very few. So everyone has to go through the compliance steps, but not every company will have to pay tax. Will have to actually pay tax. Now, let's say you're using that same example. You're a marketing consultancy in a free zone, but you don't meet the free zone criteria. And say your revenue is 4 million, so you're over the small business threshold. That means that you are a taxable business, right? So using that example, marketing consultancy, say you've got 4 million of revenue, you've missed those first exemptions because of the size and your client location. So at this point, the tax authorities stop looking at just your revenue, and instead they look at your profit, and it's profit against which you pay tax. So using that same example, let's say you're a marketing consultancy, you've got 4 million of revenue. Let's say you have 3 million of expenses, right? That means you have 1 million left over of profit, right? And that is what we look at when we are calculating your tax. Now, the first 375,000 dirhams of profit is tax-free. So if you've got 1 million dirhams of profit, the first 375, you pay 0% tax. and then you pay 9% on anything above 375. So using that example where we have 1,000,000 dirhams of profit, you'll pay 0 on the first 375, and then you'll pay 9% on the remaining 625,000. So you end up paying sort of around 60,000 dirhams in tax for 1,000,000 dirhams of profit, if you don't meet the exemptions. Okay, we won't go through details. We just wanted this to be a very quick update, especially around those registration deadlines which have just been announced. A couple of other things I just want to cover very quickly because they've been coming up with clients. If you are shutting down your business and you have crossed into your taxable period, which for most of you, you would have already done that. So if your business is shutting after the 1st of January 2024, you still need to file a tax return for the period from 1st of January up until the date that you close the business, right? So think of this from the FTA's perspective. If someone closes their business during the tax year, the FTA still needs to know whether or not they've made, a taxable profit during that period. And so you have to prove if that's not the case. You have to prove that you don't owe tax on that period up until you closed. So you'll need to file a tax return. To file the tax return, you need to register. You then need to file the tax return, and then you need to deregister for corporate tax as well. And just keep in mind that there are fines for late deregistration as well. I think it's 30 days from the closure of the business. So just keep that in mind if you are, restructuring and closing some entities. You do need to still keep, even if you have zero turnover. This is a very common question that I get. People closing down old entities that might be, they might still have licenses for or whatever. They shut them down in February. There was no revenue, but they still need to go through the compliance steps to file that final tax return to get sort of the tax clearance, which is the same approach as we have everywhere else in the world. Okay. Look, I hope that was all very clear. Again, the main thing to take out of this is the new registration deadlines. Please don't end up with a fine. If you are still unclear or you would like any help whatsoever, we have very, very affordable packages. We have a very efficient and and very professional operation here at Virtuzone on the accounting and tax side of things. The packages are on the screen right now, so please reach out either directly or go to taxready.ae. So if you go to taxready.ae, you can book a free consultation. Team will talk you through your requirements and whether or not there's a package with us that can help you out. So thank you all very much. We'll host another full webinar in due course, but until then, we will see you later.